Okay, good morning, good afternoon, good evening, whenever it is you're watching this video, this playback. We want to, again, take another commercial break from our board boot camp and just talk a little bit more about different things that are impacting us as individuals and as businesses this particular tax season. Okay, the first item is an important item. It's a key critical item when it comes to businesses, knowing what type of return to file as a business. Now, for those of you who are, you've been filing for a number of years, you're already good. You know what you need to file, what form you need to use. For those of you, this might be your second year, this might be your first year, and you were uncertain, but you filed something anyway, whatever. And it might have got kicked back to you. You might have tried to file electronically through your tax preparer or whoever, and it got kicked back and you had to mail it in. So we want to talk to you all, as well as also our new folks and our folks that are thinking about getting into forming a business, what forms you need to be anticipating when it's time to do taxes. So there are various types of forms out there. What we're going to talk about today is going to be the 1120, the 1120S, and 1065, the 990, and we're also going to mention a little something about Schedule C. Now, we're not going to spend a whole lot of time. I'm just going to mention some things about each one of those forms. So the 1120 is the big dogs. That's the corporations. That's the form that your Targets of the world, your Home Depots of the world, your Best Buys of the world, those big conglomerates file. They file in 1120. They're corporations. And then you have a step underneath that is 1120S. So that's a small corporation. That's what the S means. Okay, so that's the tax return for small corporation. Now, who files those? Well, those organizations are smaller. Those you have to elect to become a S corporation, and if you are approved by the IRS, you can become an S corporation, and you will end up filing an 1120S at the end of your tax year. So that's for small corporations, and then underneath that is a Form 1065. Now, Form 1065, it actually captures a number of businesses, LLCs, GPs, LLPs, all of these different folks have to file a 1065, a partnership return. So that's what's involved in that. Then underneath that, we mentioned this in our last kind of hiatus session, 990s. We're not going to go into the different variations of the 990s, but just the 990 are what nonprofit companies need to file. And you can refer to the other video for the different types of 990s that you can potentially file. So you have that, and Schedule C. So Schedule C are for my businesses, my startups that are just getting started, and you haven't formally structured your business, but you're doing things. You're running your corner store, you're running your lawn surveying business, you're running these different things, or you have matured your hobby into a profit making venture. Those of us who fit these different classifications, and it's the end of the year and we have to now account for all of the revenue that we've earned by doing our various, we'll call it side hustle / business, processes, startups. We have to file Schedule C. Now, Schedule C is within your Form 1040, so it's a part of your regular individual return. So those are the various types of returns that you need to file depending on where you sit in the whole scheme of things as a business. So this next item is it's critical. It's actually probably right up next to filing your returns on time is filing these different forms. So the 1099 essential, you need to file that. Typically, it's by the 31st of January. W-2s absolutely need to be filed. Typically, that's January 31st of a given year. And then you have your quarterly. If you have employees, you have your annual 940, I believe it's 943 that needs to be filed for your employees, but you have to file that last 941 as well, that quarterly return. So these different things that need to be filed in lieu of your return, your tax return. And the two most critical deadline-wise is the W-2s and the 1099s. Now, why are they so critical? Think about what they are, okay? So the W-2 is what individuals use to file their taxes, right? So they need those to get them to, you know, to us, to H&R, to Jackson Hewitt, to our, you know, local brothers and sister accounting firms here in Hawaii. They need that form, right? Without that form, they can't do their taxes, and they need to be able to do their taxes on time. Remember, for individuals, it's typically April 15th of every year that they have to file and not be late or not extend. And I think it's the 18th because of, you know, where the 15th falls this year. But they need that form. And organizations that fail to give them or produce those forms on time can be fined a lot for not submitting those W-2s to their employees. 1099s, same thing. You know, you have 1099s are typically for contract work. You know, these are, again, the small businesses and things that we mentioned earlier. This is that. So they need that information so that they can put it on their, you know, 1065s or their 1120S's or their 1120s. They need that information so they can report the appropriate amounts on their forms. Now, we all know they should already have those numbers if they're using QuickBooks, Xero, what have you, but the onus is on the folks that actually receive the service, the contract services. We need to make sure that they have that contract, those 1099s on time. So those dates are critical, and they're critical for a reason, and that's the reason why that those reports are so vital. And the 941s and 943s are as well. But again, they're statements that, you know, we need to submit to the IRS, and it's a deadline for that. And both of those documents are part of, if I can say it like that, the W-2 information. So that'll kind of give you a hint as far as the importance of those 941s as well. This next one is pretty, it's near and dear to my heart. I kind of like dealing with it. Typically, if you're a business, you know, you're using, let me back up. If you're a business and you just got started, you may have, and I wish I had like a prop, but a ledger. You know, you might just be jotting down, okay, I got so much, you know, if you're a corner store, I got so much, you know, lollipops on March such and such. I got so many, you know, canned sodas on this date. I got so many, you know, whatever, you know, that you've been picking up. I got so much stuff from Costco. You're keeping a ledger or log of what you're purchasing, right? And then when you have customers come in, you might have an old school cash register, and you might have like the receipt thing that you kind of print out the little thing, and then you're just taking those at the end of the night and you putting those in a shoebox, right? So you have that type of information on you, which is good. It's good information, but that's a level of information. Then you have folks that, I'm using QuickBooks, I'm using Xero, I'm using Wave accounting system, and every time, or I'm using Square, you know, and every time I have a transaction with a customer, with a vendor, I just enter it into the system. Or if it's Xero, I can like take a picture of the receipt and then feed it up to an accounting system, and it'll automatically process what supply expense, cost of goods sold, or rent expense, it'll process it immediately. So some of you are using that information now, and then some of you are in between. You know, okay, I got receipts at the end of the week, I take my receipts and I put them in Excel. I made so many sales, okay, I put that in Excel, my revenue, this day, and then I had like rent expense, I had utilities bill I had to pay. So you're entering into this in Excel. So there's different levels of information tracking, right? So the important thing is to understand that you need to do that, right? So you might not necessarily know how to, or you struggle with that or whatever, but you need to know that you need that for the end of the year. So what does that mean to you? Like, what am I trying to say? If I don't know how to do it precisely and categorize my expenses and my revenue items, and just give you some examples. We're not going to go over like the whole accounting session now, but just give you some examples. A revenue category would be sales revenue. Another revenue category might be interest income from a CD that I have. A part of the money in my business we put in the CD, and then we have interest income. And then another class might be commission. We might get some commissions by doing certain jobs that are not good related, but we are providing our services and engaging folks, commission revenue. So we have different categories of revenue, and not that many of revenue. Typically, if you're selling goods, you just have sales revenue, and that's it. And if you're doing a service, washing a car, working on somebody's brain, somebody's heart surgery, whatever, you're providing a service or service revenue. But those the category of revenue. Then you have this is more important, right? Not more important, but this is like the thing that kind of gives us the headaches, the cost categories. So you have, and we mentioned some, rent expense, supplies expense, utilities expense, insurance expense, repairs and maintenance costs. What else can I think of? Meal costs. Just all these different cost categories that you need to have. Now, okay, so you might be saying again, okay, well, I don't know how to do that. Like, I know we have those costs, but how to divide that into those different costs at the year, I'm not too cool on. Okay, so what you need to do is make sure you keep track and keep a shoebox, if you will, of all of your receipts. I know a lot of receipts, Amazon purchases, online, keep track of that, put it in a virtual folder, keep all that stuff together, so then at the end of the year, if you're not too good on it, but you had a lot of activity, you generated a lot of revenue, a lot of cost in there, get with a tax professional, get with an accounting professional, and have them help you get those different cost categories flushed out. And that would be my advice for all. So this next item is, it's an item that you should be aware of. There are things that can be extended, and there are things that you will be penalized on, and the extension, if you will, is not a thing. We'll say it like that. I gotta check my references, but we'll say it like that. For some items, the extension is not a thing, but the items that extensions are valid, they're viable, you can use them, are for all of the forms that we mentioned in the very first piece of this session is 1120s. You can extend those, your corporate returns. 1120S is your S corporation tax returns. You can extend those. Your 1065s, you can extend those. Your Schedule C's as an individual, you can extend those as well. 990s, you can extend those. So you can extend a lot of these things, but what you have to be leery of is the fact that the taxes that are due, the payments that are due, the other forms that are due are not automatically extended. So you still have to pay your tax or an estimate of what you think your tax would be, even though you might be extending that return for, until like 6 months. I believe it's 4 to 6 months. I gotta check my references to make sure. But that's how long you can extend it for. So you still have to, on March 15th, when most of my company returns are due, you gotta make sure if there are taxes due, that they're paid on that date, even if you extend. Now, again, you don't know exactly what it is because you haven't done a return, but you can estimate based on what happened last year. You just make that same payment this year, right? Or you can, if you think, okay, we did a little bit better than last year, so make a little bit, pay a little bit more, right? For my companies that have employees, listen, that W-2 is still due on the 31st. You still have to send that out to your people. that 1099, those 1099s to your contract workers, still due on those dates, so you need to send that information out. So all of this information is still due. 941s, that doesn't stop. You gotta send that stuff out to the IRS, right? You still have to make these different submissions and payments, even though you can extend your return. So that needs to be, you need to be aware of, because some folks think, okay, or some businesses, I'll say new businesses, so seasoned businesses don't think this, they're doing things appropriately. But new businesses might say, hey, you know what, let's extend, because we just don't have time to, we're this first year, it's hard, it's difficult, we can't, and they extend and they forget, that doesn't mean everything related to that business you extend, it's just that return you extend. Even though the 941s are underneath the banner and umbrella of the EIN and the company name that's on that tax return, it does not have the same impact. That return is separately extended. The W-2s has the company name, logo, EIN number, doesn't matter. It's not a part of the extension of the tax return. It needs to be filed on time. 1099, same thing. So you need to make sure that, yes, I'm extending my tax return, but these other things I'm still responsible for. So that's important to know. So this is the last item. And as the last item, it's important to know. I mean, to be aware of different dates that come up every single year, you know, updates from our state, updates from our local, updates from our federal government, informing us of changes. So we just went through one of the biggest modifications date-wise, probably of our generation. I mean, I think this might happen like one or two more times in our lifetime. But if you really think about it, back, I want to say in 2020, back in 2020, yeah, I think it is, 2020, the IRS furloughed the deadlines for tax submissions. So I want you to think about that. Like look in your history books of when was the last time that not only individuals, but everybody were extended months, not days, but months, from having to submit their taxes. And they didn't have to pay and weren't penalized for paying later either. So that was a big deal, right? And that's probably gonna happen maybe one or two, maybe three, maybe we pushed it by three, but three more times in our lifetime. So that's a big deal. But being aware of those change, that's a drastic change. Now in this time, you know, after COVID, we're still in COVID, but after that significant bump, the dates because things still change now, but they change subtly. You know, like, so for instance, for this season, and we're talking about businesses, but if you think back to the individuals, like, so those shareholders and partners that are going to get K-1s to report on their personal return, their Form 1040, the due date for your 1040 is different this year. It's usually April 15th, but because April 15th, it lands on a particular day, your tax return isn't due until the 18th of April. So knowing that, like updates like that. Also, you sometimes have updates when it comes to the W-2s that we've been harping on, and the 1099s. You know, a weekend might ensue, and it might be the 1st of February or the 2nd or the 4th. So knowing those updates as well, and then national holidays that kind of cycle through our calendar, you know, every so many decades, would impact, again, these days when things are due. So, and again, typically they change by a few days, right? But you want to be aware. And now here's the other thing, like state by state, if there's a national disaster that has ensued for a particular state, then the federal government will give that state grievances that will say, hey guys, I know taxes are due on April 15th, but for you, it's, so stuff like that, it will happen more, than just 3 times, but I'm talking about nationally. But locally, the federal government is aware of that, stuff like Katrina and things of that nature, they are aware, and they make concessions for those individuals. If you think about like our Midwest corridor of the nation, the continent, a lot of tornadoes come through there every so often, and they have devastating effects. Like homes are gone, right? So yeah, you asked me to do my taxes on April 15th, and we just know, and so they understand that. So just being aware of your local as well, because local, if you have taxes due in Arkansas or wherever those things happen, Kansas, and something tragic like that happens, loss of homes and things, then the state itself will say, hey, we're going to back off. Hey guys, we're going to give you 6 months or whatever. But being aware that those dates are important, you need to stay abreast of those dates.